You know that feeling when you're walking down Logan Street in the middle of Melbourne summer and suddenly the wind whips up out of nowhere and nearly takes off your hat? That's exactly what the crypto markets just did to us. Out of the blue, Bitcoin gets slammed. I'm Sash from CRYPTOLOGIC, right here in Melbourne, and today we are cutting through the noise on why Bitcoin's dipped hard, what Australia's regulators are signalling for 2026, and whether this is panic or opportunity. First up, let's talk local, because if you're in Australia, this hits close to home. The Australian Securities and Investment Commission, ASIC, just dropped their 2026 priorities, and guess what tops the risk list? Regulatory gaps around crypto firms. They're basically saying too many players are operating in grey zones, and that creates uncertainty for consumers. This ties straight into the government's Corporations Amendment, Digital Assets Framework Bill that's been brewing, aiming to force platforms holding your digital assets to get a proper Australian financial services license. Think better protection, clearer rules, but also potentially more compliance costs that could shake up smaller exchanges. We've already seen enforcement action like that $40 million fine slapped on the Coin wallet operator for unlicensed and misleading conduct. Bottom line for Aussies, 2026 is shaping up as the year crypto here gets dragged fully into the regulated light. If you're holding or trading, start thinking about what licensed compliant platforms look like, because the Wild West phase might be winding down. This segment is brought to you by cryptologic.com.au, your go-to hub for in-depth Aussie and global crypto news. Now, zooming out globally. This dip didn't happen in a vacuum. Bitcoin's taken a beating, currently trading at around 111 Australian dollars, 75,500 USD. That's down sharply from recent highs, briefly cracking below 80,000 USD over the weekend before bouncing a bit. Why? Thin liquidity is amplifying everything. Small sells turn into avalanches. Add in spillover from precious metals getting crushed, gold and silver tanked hard, forcing deleveraging across risk assets. Then there's macro spies. Whispers about a more hawkish Fed under potential new leadership, making cash king again and pressuring anything speculative like BTC. Big holders aren't immune. MicroStrategy's treasury bet is feeling the heat for the first time in years, with BTC dipping below their average buying cost. It's ugly, but markets love to overreact. We've seen these V-shaped recoveries before when deep buyers step in. All right, time for a quick breather. Here's today's original CryptoLogic joke to lighten up the mood. Why did the Bitcoin go to therapy in Melbourne? Because it had too many blocked emotions from all the recent dumps and needed to hash out its feelings before another halving crisis. Yeah, I'll be here all week, folks. Moving along, and time for the CryptoLogic takeaway. This sell-off feels driven by macro fear and liquidity more than fundamentals changing. Bitcoin's still the hardest money out there, and corrections like this shake out weak hands. For Australia specifically, clearer regs in 2026 could actually be bullish long term. More institutional trust and more adoption. But short term, volatility stays high. I am not a financial advisor. This is just my read as a Melbourne based crypto watcher. Always do your own research, manage risks, and never invest what you can't afford to lose. So, what do you reckon? Is this dip a gift or a warning shot? Drop your thoughts in a comment. Smash that like if you're holding through it, and subscribe with notifications on for more real talk updates. Until next time, stay sharp out there, Melbourne. This is Sash from CryptoLogic, and I'll catch you in the blockchain.